cognizant of. So I would say that we should be, ideally speaking, we should be growing around 14-15% kind of a growth. And also I would like to mention that this ROE is actually a bit depressed because of the kind of, as I mentioned, that we have in this quarter itself, if you really look at it, I mean, till now we have made additional provision of almost about 20,000 crore. We have got a profit of 40,000 crore for the 9 months and 12,000 crore provision we have made in this financial year for the wage hike. And another about 7,100 crore is on account of the one-off, the pension and the pension liabilities. So almost about 20,000 crore we have provided for. The impact on the wage increase in the next financial year is almost about 500 crore per month, which is about 6,000 crore overall. So 14,000 crore rupees is an additional provision which we are absorbing in this financial year. With that, our ROE is at about 19.5. My expectation is that we should be trading at more than 20% of ROE. And if at all we are trading at more than 20% of ROE and our loan growth is at 15%, incrementally we are creating additional elbow room for the loan book to grow. As I was mentioning that we have got enough elbow room to grow at about 7.5 trillion loan book can be grown. Our loan book is at about 35-36 trillion. So 7.5 trillion is almost about 18 to 20% kind of a growth. I think 18 to 20% growth is some distance. Not that we don't have liquidity. We have got enough liquidity. Our liquidity coverage ratio is at 131%. And also, when it comes to our credit deposit ratio, today we are at 60, as on 31st of December, we are at 66%. So I think liquidity wise, no challenge. Ability to support growth in terms of capital, I don't see any challenge. I only need your good wishes and your support so that we should continue to grow.
All the best, sir.
Thank you.
We'll move to the next question here. This side. This side, please. Oh, sorry.
Yes, sir. Hi, good evening.
Yeah, please go ahead.
So my first question is just on wages. That you have mentioned that you had aligned for DA to pre-2002 of pre-2002 employees, and then the 40 and 50% alignment for wages.
So not wages, it is for pension.
Sorry, for pension.
Yeah.
So how long was this for? As in that, how long did the case go on? Because we don't recollect.
See, the point is that this case was going on from the year 2002.
Okay.
And as far as the pensions are concerned, as far as the DA neutralization is concerned, it was at a industry level, and this was a decision which happened at the behest of intervention through IBA. So this is something which we have identified the likely liability, and we have provided for it.
Got it. But the IBA would have told the entire industry.
Yeah, please.
The second part, there are two parts, 5,400 and 1,700.
Yeah, 1,700.
1,700 is for the industry.
5,400 is only for State Bank of India.
Specific to SBI.
Right. So 1,700 likely impact for the industry as well, depending on their size.
Correct.
Yes.
Correct. And 5,400 is specific to SBI, and both of them are one-time actuarial assessment which we have made, and
we have only contributed to the provident fund or
corpus.
pension fund corpus.
Pension fund.
That's all.
Yeah, it's not a recurring expenditure.
So is there any other pending hike left from the past in terms of pensions?
Fortunately, nothing.
No, nothing.
Rest you never know. It can come up any day. As of now, there is nothing.
Okay, and in Q4, sir, then what is the 54 billion, the pending provision of 55 billion that you've mentioned of 54?
5,400 crores.
5,409 crores.
Yeah, 5,400 crores. That would include some impact on pensions, or this is just...
This is only salary.
Only salary.
So
Yeah.
that is salary plus the regular pension.
Salary plus, that is regular expenses. All staff expenses, because even now
Gratuity,
also...
bonus, everything is covered in there.
Even now also when we are providing for everything on an ongoing basis. It's a recurring kind of a thing, but it will stop. 5,400 crore once we will provide, the 17% aspect is taken care of.
So then over and above that, whatever pensions will be provided for, that will just be interest rate related. Is that the case? Or
That will be from the quarter to quarter, whatever is the gap, if at all there is any.
It will not be because of the new wage.
No,
agreement.
nothing.
Okay, so it will just be the rate catch-up.
As I mentioned, in my passing reference, that the wage increase impact of all this, whatever wage increase is envisaged, is 500 crore rupees per month, and for the year as a whole, it is going to be about 6,000 crore only.
Okay, so for the next quarter, then the wage provision, like your wage line is 98 billion this quarter, right?
Sorry?
Your wage. You have employee expenses and then you have contribution to employees. So the employee expenses are around 98 billion for the quarter, 9,800 crores. So next quarter, what will it be?
It would be about, 5,004, sorry, maybe if you can clarify, I'm not in a position to comprehend this question.
So basically, we have provided for 6,312 crores this quarter. For the next quarter, what remains is 5,408, out of which salary is 1,386 crores, and pension at the rate of 17% is 3,072 crores, gratuity is 378 crores, other employee benefits is 572 crores, and total comes to 5,408 crores. Is it clear?
Okay.
Another point that I would like to make, that we have done all the provision for the wage settlement that has happened. So next year around, when you see the impact of this, the overall wage bill will be around 66,000 as against 77,000 this year because of all the provisions that we have already taken.
It's only wage
bill. It is
bill.
actually going to go down.
It's only wage bill, but the pension related liabilities is actually over and above.
No, sir, it is all put together.
Okay, fine. Yeah. No, 77,000.
77 is all put together. 7,100 is excluded.
Okay, that is what I'm saying.
That is excluded.
77,000 plus 7,100 is something which we have provided this year. So as against 84,000 crore, it is going to be only 66,000 crore.
Got it, sir. That's very clear. And my last question is on margins. So can we say that now margins will be maintained at these levels? Or
Around the same level, we expect maybe at the most, if at all there is any dip, it would be only 2 to 3 basis point only.
Maximum.
Okay, and most of the deposit repricing of the past is over now?
Yeah, almost.
Okay, sir. Thank you so much and all the best. Thanks.
Thank you.
Yeah, please.
Sushil Chokshi, Indus Equity. Congratulations for very stable result and all the guidance and the time and talent which SBI provides to the country. So my first question is based on the interim budget and the FOMC outlook and the behavior of money market, and if there is a proxy to India where money market is concerned, SBI should be the largest gainer. So based on 4 trillion of excess SLR, how is your outlook on treasury? Second thing, will the interest rates peak out as newspapers are indicating, and RBI may cut to by 50 bips in the second half? The FOMC may cut in the last quarter. It's all speculation, but what is our internal outlook based on all the parameters which have happened in last 1 week?
See, when it comes to RBI and FOMC, I would say that they have decoupled to a greater extent. RBI decisions are more based upon their own assessment, MPC's assessment, as far as the inflation trajectory is concerned. As we read MPC deliberations, we would say that perhaps they are looking at inflation to come within 4% range. We are hopeful, what you mentioned in terms of second quarter. Our assessment is second or third quarter, we should actually get to see some kind of a rate reduction. This is what our expectation is. And when it comes to the money market and the trajectory and its likely impact on the State Bank of India's balance sheet, I would put it like this, that much of it depends upon how the interest rate or the T-bill and the GSEC would be behaving as on 31st of March. That will be probably helping us in terms of the eventual outcome. Though going by the current trend, we are optimistic, but let's wait and watch.
So as urbanization and consumption in India is growing and the economy is headed to 5 trillion, 7 trillion, 10 trillion based on numbers. Being the largest bank in India, I'm sure our consumer-led banking and corporate banking both needs your support with the market share what we have. If you have to gear up for those kind of economy size and challenges for the consumer credit, what enablers you will have to do it now, along with YONO and so many other things, and what kind of digital spend you will have to do for over the next 3-4 years to sustain those numbers?
Well, we have already invested in terms of the structures. When it comes to the credit processing cells for the real estate, our credit processing cells, last year we added almost 450. So now we are somewhere around 400 odd credit processing cells we have created across the country. We have enough feet on street for sourcing of applications. And also we have created a seamless process when it comes to the low value SME loans, and also for the home loans also we are working on a workflow mechanism so that the journey should become end-to-end digital. So I think it's a constant and an ongoing process which is there, and our effort is that we should stay ahead of the curve in terms of investing and ensuring that we deliver value to our customers, and we should be expedient in terms of delivery.
Sir, at the rate what you're growing around 14%, as you indicated, based on nominal GDP, in 3.5 years we would be nearing 50 lakh crores. So our cost to income with all the enablers which you have already placed in, will it not substantially be low?
Cost to income, we are hoping, actually, if you look at our productivity also, employee productivity, if you can pull out that slide, please.
Yeah.
Employee productivity. So if at all you will look at that, our productivity is significantly higher, about 29.78 crore, which has gone up from about 18.77 crore in the year 2019. So that number, it has moved to 29.78 crore. So actually it has jumped up quite a lot. We are actually leveraging multiple things here. We are leveraging analytics. We are also cognizant of the need, if at all, we are exploring the possible application for Gen AI, and also we are looking at how we can leverage technology for the advantage of our employees. So I think it's a multi-pronged approach which we have in terms of addressing the requirements, and also to ensure that we should be ahead of the curve, much ahead of the curve, as far as the opportunities when they arise. We should be in a position to respond, or maybe we should be in a position to create opportunities also.
Had you not provided the one-time provision this year, I think the year end would have been the largest profit-making company of India.
You are right, because by that reckoning, we were already at 60,000 crore plus as of now. So going by the normal expectation, I think my dream is that this bank should generate 1 trillion profit, and hopefully that is what I'm seeing is that is the reality. That would have happened if at all we would not have been required to make such provisions.
Thank you, sir. Thank you for answering all my
Next
questions.
question, yeah, please, here.
Hi, sir. Saurabh from JP Morgan. So, two questions. One on your corporate banking piece. We have seen the private banks, getting strained on LDR and all. Are you seeing opportunity either to buy portfolios from them or, accelerate growth in that space? That's the first one. And secondly, your presentation mentions a 50 basis points capital release because of the investment fair valuation in April 24. Can you just comment on that?
Yeah.
Thank you.
Well, as far as the private banks opportunity is concerned, I would rather say that we already have got a pipeline which is almost about 4.6 trillion. So that is one opportunity. But yes, of course, if at all opportunities come our way and it is in line with our risk appetite, we'll be more than happy to support such kind of requirements of the corporates. Now, the other piece which you have mentioned in terms of the impact to the extent of about 50 basis point on on the capital adequacy. Maybe I'll request Srinivas Shetty to come in.
Yeah. I think it's, when you look at the revised valuation norms which are likely to come from 1st April next year, our broad assessment is that if you have the same portfolio levels and move and implement the norms, there is a positive uptick in terms of the some of the portfolios what move to FVTPL from the AFS category. I think that is what adding to the positive MTM in that. While we may not immediately be able to add to the profit, the norms indicate that FVTPL positivity today, any positive MTM cannot be booked. It is only negative MTM which need to be booked. But the new norms allow us to move to AFS reserve. And AFS reserve is part of the set 1. So probably to start with, we'll have to wait for the detailed RBI guidelines. How do they want us to, if I'm opening the balance AFS reserves in a positive way, whether I can book that or I need to book in the general reserve is something what we are negotiating. But it will definitely add around 50 basis point to set 1. That is our assessment.
So, sir, on the
Yeah.
1st of April, we have to actually draw up a balance sheet.
Balance
again.
sheet,
So
but-
there, that will come.
Yeah, it's only a matter of accounting, but it will add to the set 1, 50 basis point. Is it clear or? Yeah.
Just on the LDR question, my question was essentially, are private banks talking to you to sell their wholesale books?
No. As of now, we have not received any such request. But if at all it comes, I'll be more than happy to lap it up if it meets my risk appetite.
Yeah, next question. Yeah.
Yeah, hi. Kunal over here from Citigroup. So firstly, maybe just to get on to that number of 77 odd thousand crores. So you highlighted that will be the staff cost for this fiscal, FY24. So today we are at almost 55. So that indicates another 22 odd thousand crores for 4Q. That would be more to do with this 5,000 crores which is required. Because any which ways this quarter there was additional wage revision catch-up which was there. But we are expecting further rise in the employee cost bill for Q4 as well.
That is only additional provision which is required to be made in the fourth quarter is only 5,400 crores
Yeah,
for the
that's
wage
what, so
increase.
maybe
For the wage
since-
increase.
Okay. Because it was
See-
coming to 55 9 months and 77, so that's where maybe 22 seems to be the catch-up for 4Q in terms of the wage bill, which is still higher than Q3, considering that there was already a catch-up from 14 to 17 odd %.
No, it is actually the requirement is only 5,400 crore additional. Apart from that, the normal wage bill which is there, that is the only requirement.
Assuming that the bipartite settlement is not implemented in the Q4, which is unlikely. I think I don't know, it may take some time. If had it been implemented, it will become a normal wage bill.
That would have been almost 500 crore worth of additional wage
Additional,
bill
yeah.
on a month-on-month basis.
Okay, got it. And secondly, in terms of the expansion in CD ratio was there this quarter, but still if we look at it in terms of margins, there was still some decline of 6 odd basis points. Would it be fair to assume that this would be more back-ended growth and we will see the benefit on the
You are very
interest
right,
more towards?
because it would not have been uniform right from the first day of the quarter. It would have happened towards, it is normally seen towards the busy season and also later than the busy season. That is something which is there. And also the fact remains that during the busy season, because in the retail sector, the competition really mounts and then we have to give all kind of concessions, relief, etc. But nevertheless, the asset come to our book. So that is something which has happened. So I think it is more abnormality considering the fact that we are chasing the quality, and for quality we are willing to look at the lower risk. You will probably appreciate that the CRP naturally has to be lower for the better risk, and that is something which is the reason.
Yeah. And lastly, in terms of RBI's increase in risk weights, both for NBFC as well as unsecured. So maybe they have not highlighted any which ways. We have been commenting that our unsecured portfolio is much better than the secured as such. But just in terms of the RBI's indication or maybe highlighting that this could be the riskier segments, what would be our stance in both these segments, and are we passing it on in terms of the increase in the lending rates?
Yeah, we are actually, it has got an impact of about 49 basis point for our CET1 and 70 basis point for the capital adequacy ratio overall. So to that extent, the cost of capital has gone up while we are lending to this particular sector. And when it comes to NBFCs, etc., we are passing on. We are actually have jacked up the pricing also.
To the extent of?
Depending upon each of the NBFCs, depending on their risk grade, we will look at it, how much we should be in a position.
And on Express, we have not increased.
We have increased in
We have,
Express credit.
we have increased in the Express credit also.
Okay.
Next. Yeah. Good evening. This is Mahesh from Kotak. Just to clarify on the question that he had asked, this 77,000 that you're saying includes the 7,100 crores.
No.
No, then I think the statement he's asked is right? Because in the 9 months you have
If you
provided
can clarify to
55.
this.
No, come back again. I will just explain. So the wage revision impact is 18,000 to 127 for the whole year. So and for the next quarter, coming quarter, it's 5,409. We have already made a provision of 12,718 during the 9 months. And in FY23, we made a provision of 2,490. Okay, the staff expense, which anyways we are paying to the staff, no. So you look at that. Up to 9 months, 24, it is 42,171. So 3 more months we will pay the salaries and pension and everything. That comes to 16,829 for the next quarter. Add to that 5,409. Is it clear? So for the whole of next quarter, it is 22,238, which is staff expenses plus the provision. Put together all of this for the whole year, it is 77,127, which means 59,000 for the wage bill and plus 18,127 for the increase.
Mr. Kara sir, if you look at the numbers today, your average wage cost, even if you exclude these one-offs, are running at about 30 lakhs, which is significantly higher than almost all the public sector banks and the private banks put together. Any direction in which you want to see how does this number go? Because this is simply way too high that we are seeing.
Sorry, I could not get your question, please.
If you look at the wage cost for next year, which is about a little over 65,000 crores, on a 2 lakh employee base, you're still looking at about a 30 lakh.
2,35,000.
Give or take, the number will be work out to roughly about 30 odd lakhs per employee. Most banks are.
We have got about
significantly low.
300,000 pensioners also.
But how do you solve this problem? Because a
No, see,
large
the
part
point
of
is
your current cost.
The problem which can be solved is only through improving the productivity, and that is something which we are trying to showcase. Our effort in terms of improving the productivity have already started yielding results, and I'm sure going forward this will also improve. The productivity will actually improve. The
Also,
kind of focus which we have on our digital. Today, almost 95,000 crore worth of loan book has been generated through the digital, and it is up by about 30%. Going forward, we expect that this particular lever will start creating value, and our back of envelope calculation is as far as the pension obligations are concerned, that we should be in a position to meet by generating this incremental productivity through the digital. And we have got the attrition rate which is just about 1%.
Perfect. So just two questions.
As compared to the industry level of 35, 33 or whatever be the number.
Perfect. So two questions, ma'am. One is, what would be the outstanding priority sector book and RIDF investments? Or just specifically the RIDF investments?
That specific will provide to you.
Okay, just one question to you, sir. Some of the NBFC-led banks, companies like PFC, REC have become a little bit more aggressive on the power sector. For some time, we have seen almost all public banks in general being slow on this sector. Is there any opportunity that is being missed here?
I don't see that we have missed out any opportunity. But yes, of course, as I mentioned, that we always evaluate the risk in terms of the return which we can get. And if at all it does not meet our risk appetite, we let it pass. So renewable energy is one of the areas where we are very clearly focusing, and we have developed the expertise also. And we are seeing good traction coming for that.
We have one last question from One more person.
No,
Hi, sir.
this gentleman is here. Yeah.
Yeah, Bhavik from Morgan Stanley. Sir, two questions. First, sir, are other operating expenses growing at, say, 20% YOY? Sir, how should one look at it? Like, will this be elevated or as in should it normalize?
Other operating expenses. Can you please pull out the slide?
Slide number. Operating expenses, slide number 18.
Maybe if at all you can throw some light on this. Yeah.
So, sir, majorly, sir, it comprises of the staff expense, as you can see in that, and also the pension.
No, so I mean other operating expense,
Other operating.
excluding the staff.
Just a minute. Other operating expense. Overheads. Overheads, I don't think there's a very significant number.
In terms
that
of
we can-
absolute number, they are not really very big
Not
number.
very relevant, but anyway, I can tell you some of the items where we have seen this growth. One is business acquisition and development expense, which is to the tune of 711 crores. Other tech expenses to the tune of 371 crores. DCIGC insurance 230 crores. GST expense 128 crores. Donations 81 crores. PNT expenses 74 crores. I don't think there is such
So,
a
ma'am, so
big number.
basically we have a quarterly run rate of, say, 11,000 crores.
So actually,
So-
see one aspect which is there when it comes to the insurance, particularly deposit insurance. As the deposit grows, this will continue to grow.
And quarter on quarter,
So-
actually, it has gone down, sir. From 11,948, it has gone down to 11,577.
Yeah, that is for the total overheads have
Yeah,
come down from
overhead.
11,948 to 11,577. And I think there is the major items which are there is one among them is ATM, CTM, debit card, and those expenses, which I think is a cost of delivery, which will continue to be there. And the other one is the various acquisition and development expenses. Again, it is corresponding to the various growth. It will continue to grow. So this is what is the behavior, what we will get to see.
So what will be the digital expenses as a part of this? So as in, should we expect this to go to 13,000 crore run rate per quarter next year or more than that?
Much of it, when it comes to digital, part of it would get depreciated also.
Okay.
So we'll have to see that
Okay.
composition, how much we can depreciate, how much we can book in the revenue book. That is something which we'll see.
And so second question, so recovery from return of accounts, the OCA accounts, they have been around, say, 4,300 crores so far in the 9 months. Sir, as in how should one look at it? Like, how do we expect?
This stock is actually is now coming down. So I think, and also there are no lumpy recoveries which are expected to come in. These are all now small value recoveries which will come in. But yes, our effort is to see that we should step it up as much as possible. But it has got its own limitation because OCA is generally those accounts where the security, if at all it is there, is much lower. And various such considerations are there when it comes to affecting recoveries in OCA accounts.
So in the next 6 months, as in, do we expect anything significant from NCLT, like in the pipeline?
See,
At
it is
least
very
during the
difficult to
quarter.
predict what will come through NCLT.
Okay.
But nevertheless, our effort is to make, there's no, we don't let our effort go waste. We are pursuing quite actively, and wherever possible, we will certainly be looking at the outcome. But when it comes to NCLT, it is not merely what our efforts are. We have to depend upon the other members of the consortium, COC, etc. And there is a dependence on the decision taken by them also. So I think, and also the ecosystem, how the ecosystem works.
So lastly, sir, as in from this 4,000 crores, sir, how much was this from NCLT? As in, if you can shed some light. So that's it
I
from
will
me.
not have that granular
No, we
detail
don't
with me.
have anything from NCLT in this, at least as I have the numbers. Basically, it is contributed by our retail branches to the tune of 1,537. The specialized wing has contributed 2,758. I think the biggest recovery during this year is around 200 crores for as far as lumpy recoveries are concerned. And IBG has had a small recovery of 33 crores.
So generally, these are all compromise is something which works much, or the surface action, which yields better results and faster results.
So thank you, sir, and sir, good luck for future goals.
Thank you.
Thank you. So we have
I
a
think
few
there was
questions coming through
There was
here.
one question on RIDF outstanding.
Yeah.
The outstanding is 2,67,000 crores.
So we have a few questions coming through the online webcast. These will now be addressed by the chairman, sir.
Yeah, this question has come from Aditi Naval. With respect to business development expenses, there has been quite a significant jump in September quarter. Wanted for you to throw some light on the same. Business acquisition and development expenses has increased by 194 crores sequentially. On quarter-on-quarter basis, increase is due to amortization of the PSLC issuance charges of by rupees 65 crores. And business operation expenses have gone up by 81 crores. And auto loan sourcing fee by 54 crores. That is the explanation for the business increase in business development expenses. The other question has come from Mr. Anil Chaurasia. What were the number of branches at the end of December 23? At the end of December 23, we had 22,494 branches. Next question comes from Ashish Agarwal. Percentage of book linked to MCLR, EBLR and fixed rate book. MCLR 37.6%, TBLR is 27.4%, and fixed rate is 20.9%. Another question has come from CG Philip. Any guidance on loan growth and deposit growth for financial year 24? We expect all scheduled commercial banks deposit to grow by about 12 to 13% and ASCB advances to grow by 14-15%. Accordingly, our growth in deposit and credit is also expected to be in the similar range. Next question comes from Mr. Abhishek Murarka. Will any part of 7,100 crore provision recur from the next quarter onwards? Also, what will be the approximate additional wage provision you will have to make in fourth quarter? There will be no recurrence of this one-time provision. This is something which I would like to mention. It is only one time, and for the uniform pension from 40 to 50%, and DR neutralization also is only 1,700, which is one time. There is no further repeat of such provisions. And provision to be made in quarter 4 of the financial year 24 is about 5,400 crores for the increase in wage to 17%. Mr. Param Subramanian, why did we see a drop in NIM? How much wage revision provisioning is still pending? NIM has come down mainly due to repricing of deposit at higher rates, mainly term deposits. And provision to be made in Q4 of financial year 24 is 5,400 crores. Shidhal Irkinesh, any special plans for agriculture business growth? Agri advances have registered a growth of 18.12%, while we'll continue to grow in our traditional book in KCC and agri gold loans. Our key focus area will be to finance all the players involved in entire agri value chain. Under investment credit, we are seeing a lot of opportunities under Atmanirbhar Bharat scheme of the Government of India, that is AIF and the PM FME. We have launched 2 new products, namely Agri Enterprise Loan and Kisan Samriddhi Rin, which will enable us to onboard high-value farmers. This question is from Ashish. Please tell us about exceptional item of 7,100 crore. One-time provision for competition of pension from 40% to 50%, and DR neutralization for all pensioners, family pensioners who retired prior to 1st of November 2002. One-time provision for competition of pension is 5,400 crore. One-time provision for DR neutralization is 1,700 crores.
So thank you, sir. I trust all the questions have now been addressed, and we'll be happy to respond to other questions in offline mode. So let me end the evening with thanking the chairman and the top management team, the analysts, and ladies and gentlemen. To round off this evening, we request you to join us for high tea, which is arranged just outside the hall. Thank you.
Thank you very much to all of you. Thanks a lot.